choose title. Pure, good to see how you doing. Evening. Pablo, good to see you as well. How you doing? How you been? Bill, good to see you as well, brother. How you doing? How you been? Evening tour. Good to see you as well. How you doing? How you been? Comatose, good to see you as well. How you doing? Hello, Miles of CMF. How you been? Theos, Miles, how are you doing? I'm doing great. How you doing, brother? How you been? How's everyone doing today? A lot of things have been happening in terms of the news. A lot of data reports were released today. A lot of movements are happening inside the institutional space, not just inside the US, but also outside the US as well. Hi, Miles. Tell us some good news. A lot of news to go through, a lot of data reports to go through, and some perspective news, but for essentially higher profile people. Hi, brother Camel. Good to see you as well. How you doing? How you been? Happy Pisces. Good to see you as well. How you doing? How you been? I'm from Malaysia today. Heavy rain. Let's go check out how you doing. Good to see you as well. So let's do a breakdown of what we're going to be going through on tonight's live. Good evening, Miles of CMF. Orphan, good to see you as well. How you doing? How you been? Hi, Miles and all CMF. Dennis, good to see you as well. How you doing? How you been? JP, good to see you as well. How you doing? How you been? Good evening. Megan, I'll CMF. JP, good to see you, brother. How you doing? So let's go through a breakdown of what we're going to be talking about tonight's live. We're going to be discussing matters of who is the next SEC chairman, because apparently someone has been chosen. So we're going to go through who's the next SEC chairman, because apparently Trump has chosen someone. Then we're going to be talking about essentially Bitcoin's metrics in terms of the cryptocurrency metrics as well. A data report that's been released from one firm. We're going to be talking about Pantora Capital on tonight's live as well, on their recent reports on the cryptocurrency space. We're going to go through essentially another analyst and a report perspective on this matter as well, in terms of the market space moving forward. We're going to be talking about Jim Cramer on tonight's live as well, on his latest opinions on the crypto space. We're also going to talk about topics related to the CEO, essentially a CEO of VanEck. Jan VanEck has came out and given his perspectives on the market cycles, the prices that Bitcoin could reach, the prices the cryptocurrency market space can reach moving forward due to a Trump presidency and so on, due to regulations. We're going to be talking about also about another crypto firm or a blockchain firm that's just landed a massive deal with a bank, Deutsche Bank. $80 million is so far they've raised. We're also going to talk about topics of OKG, essentially a research report that's just came out today from OKX firm on the market space moving forward. A lot of companies have decided to release their reports simultaneously today together. We're going to be talking about Japan's new firm that's entering the crypto space even more. They said they're going to be following MicroStrategy's footsteps. Another company right now following MicroStrategy's footsteps. We're going to be talking about JP Morgan also on tonight's live as well, regarding predicting an S&P 500 market space going higher due to AI essentially coming in. We're going to be talking about Russian ministry proposes 2-year transition for the digital route to be completely taken over the entire of Russia, essentially. We're going to be talking about on tonight's live regarding Vancouver, apparently aiming to become some sort of a Bitcoin city or a crypto city, essentially. We're going to be talking about on tonight's live regarding the matters of Foresight Ventures entering the One World Trade Center in New York. This is the first, essentially you could say, massive global cryptocurrency investment firm entering the World Trade Center. It is quite massive news. We're going to be talking about the Chinese company SOS getting involved inside the Bitcoin space. Yes, that's right. You heard me right. A Chinese company is entering the crypto space. And China was not allowed to be going towards Bitcoin. We're going to be talking about 21 shares essentially unveiling their new 4 European crypto ETPs and which crypto projects were chosen. We're going to be talking about Bitwise expanding on their XRP ledger expanding on their XRP ETP, changing some things out, new filings, and Ripple's also involved as well in that matter. We're going to be talking about, on the topic of Ripple, we're going to be talking about Trump's potential team around him for this crypto department he's building inside the United States. We're also going to be talking about matters of regarding, is the case for Ripple going to be dismissed when essentially Trump comes into power and Gary Gensler resigns himself? Apparently, according to one incredible source, yes, it is. The Ripple case is going to be dismissed. Now, before we go through any of those news topics with all the data reports, essentially, and the first news topic we are going to be going through is the new report that's came out of somebody has been chosen for the SEC chairmanship. But before we go through that, let's go inside the comment section first. And I just want to say welcome to the CMF Live. If you're watching this for the first time ever, this is episode 211 of the CMF Live, which is incredible. If you're watching this for the first time ever, on this live, I talk about the most recent things that's happening around the world in terms of cryptocurrency, CBDCs, AI, politics, regulations, vital information for you to know about regarding the world completely transforming into a digital space. And also we do Q&As on this live as well, which means if you have any comments, put it down inside the comment section. I'll be more than happy to answer any questions you may have. And the disclaimer essentially of this live is not financial advice, not political advice, and whatever I say is only for entertainment purposes only. So, welcome to the CMF Live. If you're watching this for the first time ever. And if you're regular, let's go CMF. I just want to say, by the way, thank you so much to everyone that's retweeting this live right now. I'm getting notifications on X. Thanks so much to everyone that's retweeting this live right at the beginning, who's liking this live on X, and putting a comment outside the video. And thanks so much to everyone on YouTube who's watching right now, who's also liking the video and putting a comment outside the video as well. Now, let's go through the comment section first before we go through the first news, which is relatable to Trump. And essentially, who's the next person on the SEC chairmanship, because it has been chosen apparently. But let's go through the comment section first, and then we'll go straight into the first news. Good evening, Miles and CMF. Orphan, good to see you. How you doing? JP, good to see you. How you doing? Hyper Sniper, good to see you. How you doing? All hype is on that. Old season has started. I think we may be close, but could BTC rally based on Trump's plans to buy BTC, push this back? It's a great question. It shouldn't, but it should do very well due to a new SEC chairmanship, Gary Gensler resigning, rules and regulations, a Bitcoin reserve. Let's not forget, the United States is not the only one that's going to be doing a Bitcoin reserve. And obviously it is the biggest market space in the world. But other countries are already starting to adapt the idea of a Bitcoin reserve. Brazil is thinking about passing a law for a Bitcoin reserve. And they're not the only ones. There's a few other countries that are aiming for a Bitcoin reserve as well, just because Donald Trump announced it a very long time ago. So if all these countries fall in line and the US falls in line as well and buys like a 5% supply, as they said, it should push the price higher and higher. Even Miles of CMF, Manny, good to see you as well. How you doing? And the excitement should be there to push even higher as well. Lena, greetings, Miles of CMF. Good to see you as well. How you doing, Lena? Good evening, Miles of CMF. Ring forever. Good to see you as well. How you doing? What a waste of millions of dollars. Hello, Miles T. Good to see you as well. How you doing? Yes, CMF equals great to catch you. Great to catch? I don't understand what that means. Hi, Miles and CMF. Good to see you as well. How you doing, Connie? Miles, you think Link's a utility run coin and won't do so well during the bull run? Do I think Chainlink is a utility project? Hell yes. Chainlink is definitely a utility project due to the massive amounts of list of partnerships it has. Do I think it's going to do well in the bull run? It should do. If we're going to be having a utility run, which we're heading towards due to the amount of regulations in place heading towards us. So Chainlink should do incredibly well for itself as well. Morning, Miles and CMF. Shelly, good to see you all morning. How you doing? How you been? Miles, so many mixed messages out there. If USDT is going to come down, will not bring Bitcoin down with it. People are saying in 5 years, Bitcoin to 1 million, other to zero. Yes, it is very true. It's a complicated situation. One side of the crypto space is saying that Bitcoin is going to go to $1 million. That includes institutions. The other side of the crypto space is saying that Tether is being investigated. Which side is correct? Both. Let me explain. Tether is, if USDT comes down crashing due to essentially an investigation, in its place is going to be other stablecoins. So USDC is going to be there to replace it, or RLUSD, Ripple stablecoin, is going to be there to replace it, or even FTUSD essentially from Binance. So yes, if USDT is actually being investigated and they do show signs of implications, then the market will be affected, guaranteed, because Tether is the biggest stablecoin that's controlling the entire crypto space. They have a massive dominance inside the stablecoin space, and it will definitely impact the crypto space. But that doesn't mean if Tether gets investigated, Bitcoin is going to go to zero, because that has zero correlation for it to go to zero. So this is why I said both are correct. Bitcoin going to $1 million, it's very possible if every country starts adapting and using it as a reserve asset. The United States is going to be using Bitcoin and essentially holding on to 5% supply of Bitcoin. If every other country adapts the idea of holding 5% supply of Bitcoin, then Bitcoin can easily go to $1 million over time, not overnight. Now, the idea of Tether being investigated, Bitcoin could go to zero, it's incorrect and it's misinformation. If Tether even gets investigated, if USDT gets investigated, and they do essentially end up winding up into prison, it still wouldn't make Bitcoin go to zero. It would affect the price of Bitcoin, affect the price of every cryptocurrency due to their massive amount of dominance, but it still would have never made it go to zero in the first place. So the people that are saying Bitcoin can go to zero due to USDT are incorrect. Bitcoin will be affected if Tether gets investigated, but so will any other cryptocurrency, to be fairly honest. But they're not going to zero. They just get affected drastically due to the price, and then do a 360 and go back up. So if Tether gets investigated, nothing's going to zero. The price will be affected. Every crypto asset will be affected due to the amount of dominance essentially USDT has, but it's not going to zero. But the price of Bitcoin can go to $1 million if every country adapts the idea of 5% supply. Not overnight, over time. Hello, Miles and CMF. Mav, good to see you. How you doing? I hope that rectified it. Happy Pisces. I meant Ripple with the SEC, waste of money. Yes, I agree 100%. Good evening, Governor, and the rest of the CMF family. Funky brother, good to see you. How you doing? How you been? Great day, Miles and family. Golden Dragon, good to see you. How you doing? How you been? Good evening, Miles and CMF. Bull XRP, good to see you. How you doing? How you been? USDT not going anywhere, and BTC is going to $1 million. I agree regarding BTC going to $1 million. I'm not really sure on Tether's future. However, it seems like they're not investigating it yet. I don't know when they're going to pull the trigger on Tether, or if they're ever going to pull the trigger, but it seems like maybe in a few years' time or a few months' time, you might get surprised by Tether. Utility never happened in crypto, right? Next year will be the first time ever. Correct. Utility never happened in crypto this year. That is very correct. Next year it is going to be happening due to regulations. For utility to be able to happen, there needs to be regulations for banks and institutions. Otherwise, they're going to be operating gray areas, which leads to lawsuits. But this year, we did have the start of Bitcoin ETFs and some institutions tiptoeing inside the market space, following MicroStrategy's footsteps, and some banks opening up their investment wallets. Early happy Thanksgiving to all Americans. Let's go Golden Dragon. Trump, Trump, Trump. Let's go Golden Dragon. So let's go for the first news on tonight's live. Apparently, Donald Trump has chosen who is going to be the next SEC chairman. And the decision is, it's not confirmed, but there are many rumors going around that the next SEC chairman is going to be President-elect Donald Trump's transition team is reportedly considering Paul Atkins, a former SEC commissioner and well-known figure in the conservative financial circles, to head the US SEC, essentially. Scott Atkins is the leading candidate to replace outgoing SEC Chairman Gary Gensler, according to people familiar with the talks. Trump is expected to make a pick for the SEC chairmanship in the coming days. Sources have said, although no final decision has yet been made, other candidates running include current essentially SEC Commissioner Mark and former Commodities and Futures Trading Commission CFTC Chairman Heath essentially Turbot and Robert Stebbins, a partner at Wilkie Farr and Golska LLP. Atkins, who served as a Republican SEC commissioner under President George W. Bush, is known for his support of cryptocurrencies and fintech innovations. After leaving the SEC, he founded essentially Patumark Global Partners, a consulting firm for financial institutions, and testified before Congress advocating for regulatory reforms inside the cryptocurrency space. He called for a reconstructing of the SEC operations to minimize what he sees as excessive and unnecessary rules. Atkins' pro-crypto stance is in line with Trump's campaign as a promise to embrace digital assets, which he has vowed to appoint crypto-friendly regulatory movements, create a strict Bitcoin reserve, and reserve with the Biden administration has described as an anti-crypto war, and reverse the entire anti-crypto war. If appointed, Atkins could signal a shift in the SEC approach to digital assets. Trump's spokesperson Caroline essentially said that the administration is committed to a strong team, saying that President-elect Donald Trump has made some brilliant decisions with lightning speed on who will serve as the second administration. He will continue to announce his remaining decisions as they are made. Despite potential changes to the SEC's approach to crypto, the agency is expected to continue to focus on traditional priorities like combating fraud and insider trading, pyramid schemes, and misleading corporate disclosures. Atkins' extensive regulatory experience and market-friendly, essentially, perspective suggests that he could lead the SEC to a balanced innovation and investor protections. But what I want to say is, what I want to say is amazing choice. So far, amazing choices, honestly, from Donald Trump. Every single person he's chosen for his campaign to lead some sort of American departments have all been great choices. And this is also another great choice. The man is already pro-crypto. He's a former SEC commissioner. He understands how the SEC operates. He wants to bring the rules and regulations. He has criticized Gary Gensler in the past multiple times. He's criticized the Biden administration for bringing war on crypto. And this man wants to bring innovation. And he's on the footsteps of Donald Trump. He has the same thought patterns of Donald Trump. So far, great, honestly. But also, there's another source that's going around that I reviewed yesterday, that Donald Trump might be choosing the CFTC to have greater power over the SEC in terms of crypto regulations. Rustam Benham is the chairman of the CFTC. He's also pro-crypto as well. So either way it goes, we're pretty much fine inside the crypto space. We're going to get the ETFs we wanted. We're going to get the rules and regulations we wanted. And also, most importantly, we're going to get that crypto adoption due to utility happening, which is the most important part, to be fairly honest, regarding utility projects. Now, moving on essentially from who is basically the chosen person for the SEC chairmanship, to Bitcoin metrics, essentially a suggesting report that has just came out on Bitcoin and the cryptocurrency market space in general. A lot of people have suggested that when Bitcoin reaches around $100,000, Bitcoin is going to be dropping in price points due to reaching $100,000. Now, there are reports indicating differently. Bitcoin's valuation metrics suggest the bull market is far from over and could be settling the stage for even further highs. With no signs of overvaluations typically seen at price peaks, analysts are eyeing a current potential target of $146,000 in this cycle. Now, this is a report that's just came out today from crypto quants firm. It notes that the value held by new Bitcoin holders still lags behind previous cycle levels, and holdings of new investors currently sits just above 50% of total invested in the cryptocurrency space. While in previous market tops, such as 2017 and 2021, it was over 90% and 80%. Well, right now it's at 50%. So there's still room for progress, and going to 100,000, they're predicting we're not going to be dropping down. We're going to be going higher than above, essentially higher than 100,000. These levels may be justified by slow retail activity in Bitcoin purchases over recent weeks. According to the analysis firm, essentially heightened retail activity is often a typical condition of market cycle tops. Since October, retail investors have reduced their holdings by 41,000 Bitcoins, while larger investors have significantly increased their holdings and adding another 130,000 Bitcoins. Previous bull cycles have ended when retail investors were buying aggressively, which is not the case today. Do you know why that is not the case today? Because previously it was the retail section moving the prices up, and hedge funds as well. A lot of people weren't aware of that. But hedge funds were also big manipulators inside the crypto cycles previously. But this time around, even if the retail section runs out of money and can't afford to buy Bitcoin anymore, guess who's buying? The institutions. Guess who's buying? Michael Saylor. Guess who's buying? Franklin Templeton. Guess who's buying? BlackRock's investors and so on. The list just goes on, amount of institutions. So yes, we're going to be going above $100,000. This prediction of people having that if we reach $100,000, we're going to be dropping dead down, it's not correct. We could go down because that's just how the market works. It's up and down. It's never going up. You know, if no market space continues going up, no market space continues going down. unless it's a very crap asset. But that is the reason why it's not like previous cycles, once again, because we have institutions in play, we have ETFs in play. So if the retail section tops out and they can't afford anymore to buy Bitcoin because it's too priced high, because the price is too ridiculously high, guess who's buying? The institutions. So we can definitely go above $100,000. This shift suggests a potential transition in market dynamics, with institutional and large-scale players driving the accumulation phase instead of the retail investors. Investors on exchange-traded funds ETFs led the purchase of Bitcoin in November, with weekly inflows soaring to essential records of $3.1 billion in a week ending November 22nd, when the cryptocurrency price reached a record of $99,655.50. The Bitcoin price declined to around $91,000 on November 26th, failing to break the $100,000 resistance level. For some analysts, the cryptocurrency may still see a 30% correction before crossing the six-figure milestone. CryptoCon's bull, essentially bear in market cycle indicators, has been in the bull area since early November and has been rising since then. However, the indicator still lags from the overheated bull phase reached for the last time in March 2024, when Bitcoin achieved a new high trading above $70,000. From a realized price valuation perspective, Bitcoin's top price target is currently at $146,000, is what they're predicting. Bitcoin is going to be reaching $146,000. This price band has acted as a top for essentially the price of Bitcoin in previous cycles, such as April and May 2021 states reports. The P&L essentially index has not reached overvalued levels so far this cycle, which indicates that the price would still have room to increase. According to this firm, CryptoQuant's firm, their analyst firm, their report that was released today, that Bitcoin is still not overvalued in any sort of a way. And even if we do reach $100,000 and the retail section can no longer afford to buy Bitcoin at such a high price, they said, guess who's buying? Basically, the institutions is buying. Michael Saylor is buying. Michael Saylor is raising $42 billion. MicroStrategy is raising $42 billion to buy more Bitcoin. And this man said he's buying Bitcoin at $100,000, $120, $130, $140, $150. He doesn't care if Bitcoin's sitting at $180,000. He's still buying. And he's not the only one that's doing this. There's a lot of companies following MicroStrategy's footsteps, especially in Japan's market space as well. But yeah, it's not like previous cycles when the retail section runs out of money and they can no longer support Bitcoin's price point, where they sell off into essentially altcoins. That same cycle isn't going to be repeating that much, mainly because the ETF buyers, the high-profile investors, the BlackRock IBIT ETFs, and essentially Grayscale ETFs and Franklin Templeton and so on, the list of ETFs that are going on, these high-profile investors are not going to be selling off their Bitcoins, their Bitcoin ETFs, to feed into altcoins, because there's no logic behind it. The whole reason they're entering the ETFs is that they don't have to essentially safeguard their crypto assets. They're buying ETFs for the security that is offered with it. That's one reason why institutions prefer to buy ETFs rather than buying from Binance as a Bitcoin itself. It's the security aspects about it, because they don't have to do anything. They're essentially they're reaping in the rewards from the price going higher, but they don't have to worry about the safety of the asset because it's an ETF, not the actual asset itself. So on those bases, it's not the same cycles. I've said this many, many times. I've been saying this since beginning of 2024. Since January, I've been saying it's not the same cycle. Actually, to be fairly honest, since 2023, I've been saying that 2024 is going to be when the world starts shifting into digital space and so on. And it's not the same cycle. Grayscale has said the exact same thing as well. So if you're somebody out there that's essentially thinking to themselves that Bitcoin reaches $100,000, it's going to be drastically dropping in price value. Look, it can drop in price value, but it's going to be drastic, and it's going to be going higher than $100,000 because the institutions are still buying. The ETFs are still happening, even if the retail runs out of money. In the past, if the retail ran out of money, that was pretty much it, but not anymore. Now, staying on the topic essentially of the Bitcoin ETF space and the Bitcoin metrics and so on, Pantoro Capital is what we're going to talk about next. Pantoro Capital's new report has came out as well. 1,000x Bitcoin return fund is what's basically going on. Pantoro Capital, an investment firm focused on digital assets, has declared a remarkable achievement with its Bitcoin fund, which was launched in 2013 and has now delivered an impressive 4-digit return. Dan Moorhead, the CEO of Pantoro Capital, highlighted in a recent blockchain letter that the fund has reached a milestone of 1,000x returns. He emphasized that Bitcoin's growing acceptance is pushing it towards an unprecedented levels and values, in part due to the election of pro-crypto leader Donald Trump in the US. According to Moorhead, Only 5% of the global assets are currently in Bitcoin, but he anticipates that the regulatory clarity inside the United States will boost this figure significantly beyond that. He pointed out that the prominent institutional investors like BlackRock and Fidelity are now enabling easier access to Bitcoin investments and transforming the landscape for institutional participation. He forecasted that the increased acceptance could elevate Bitcoin's value by over 687%, potentially reaching $740,000 per Bitcoin. Moorhead also, during a recent CNBC Squawkbox interview, dismissed previous speculations regarding Bitcoin's potential decline to zero. There was a time period where institutions from Wall Street were coming out on live news on Bloomberg, for example, or CNBC Squawkbox, and saying Bitcoin is going to go to zero and it has no value. But that's completely changed now, where we essentially have Wall Street heads coming on Bloomberg, coming on CNBC Squawkbox, and so on, and saying, well, Bitcoin is never going to be going to zero. We're just going to be seeing higher price points, especially due to the clarity we're going to be having even more in 2025 due to Donald Trump and being in power. Currently, 50 million individuals in the US and around 300 million globally own Bitcoin, which, with firms such as BlackRock and Fidelity actively involved, Moorhead believes Bitcoin has reached a significant momentum. Bitcoin is trading at around $93,000, $93,931, reflecting a 152% increase this year. Regulatory advancements and institutional interest creates promising opportunities for potential investors. The market could see a shift in major players engaging more with Bitcoin or crypto assets moving forward. With Bitcoin's current trajectory, the confidence of regulatory clarity and institutional involvement is essentially paving the way for substantial growth inside the digital asset market space. More eyes on Bitcoins means more eyes on the entire cryptocurrency space, to be fairly honest. Is a positive on both aspects. But it is true, the tables have turned. A lot of institutions would have came previously out and said, well, cryptos has no value, Bitcoin has no value, it's going to zero. There seems to be a lot of things that have changed. A lot of Wall Street heads are coming on Bloomberg and so on. And Bloomberg is pretty much gospel for the entire Wall Street, or any sort of, even London Stock Exchange is gospel for them as well. But they see crypto assets that pretty much have massive potential now. They see crypto assets, not all crypto assets, just to point that out. They don't see meme coins as massive potential. Only retail section sees meme coins as massive potential. But legitimate crypto assets, they see them as massive potential moving forward, and even the AI space. And it shows. It definitely shows when you have essentially someone like him, going on essentially CNBC Squawkbox talking about crypto assets, Pantoro Capital's CEO talking about crypto assets, talking about how the future looks incredibly big for these assets. But they all point to one key aspect, which is Donald Trump. Every single Wall Street head that's made comments about the market space going towards a positive side moving forward, every single one of them have said because there's legal clarity that we're going to be heading towards, and it's because of Donald Trump. I've said this a million times, and I can never say, and I can never stop saying it. Thank God Donald Trump won. Honestly, thank God thank God Donald Trump won. Now, before we go through the next news, let's go inside the comment section first, and then we go straight into the next news, which is an analyst report that's came out today as well. So many analyst reports have came out today. So many data reports have came out today on not just Bitcoin, but the entire cryptocurrency market space moving forward. As I said previously, this is a live, which means if you do have any questions, put it down in the comment section. I'll be more than happy to answer any questions you may have. Let's go inside the comment section first, and then we'll go straight into the next news. The whole crypto is designed for utility next year will be finally happening. Facts. I agree 100%. Utility is basically next year. Full utility is going to be happening. The start of full utility is going to be happening next year. By 2027, we'll be fully in utility, because that's when all the bank managers, all the bank executives and CEOs from Barclays, HSBC Bank, Lloyds, NatWest, Santander, they've all stated that by 2027, there's going to be no more bank branches or cash points on the high streets, which is an indication of fully digital by 2027. So basically Bitcoin will be a 10x, but I'd rather put thousands into other coins that will go to 50x versus 1,000 into Bitcoin. What are your thoughts? No, so Pantoro Capital didn't say Bitcoin is going to be doing 1,000x. They said since they've invested into Bitcoin with the large portfolio that they do have, they've made basically 1,000x. They're not predicting on that presumption of 1,000x is headed all the way in any sort of a way. But Bitcoin obviously is going to be doing a lot of X's along the way as well. Yes, preferably it is better to be entering into other projects. XRP will do you a lot as well in the long run. XRP will do very well in the long run. I've been saying this for a very long time. XLM will do very well. XDC will do very well on the regulations as well. HBAR will do very well. These projects, XRP, XLM, XDC, HBAR, ACH, will do incredibly well on the regulations, because the regulations will provide clarity, which means then banks and institutions can get involved in one of the biggest market spaces, which is the United States. And if they do that, then the rest of the world will just follow eventually with them. Already, there's a lot of things happening around the world. They're following America's footsteps, even though we still haven't had regulatory clarity, and even though Gary Gensler is still sitting in his chair, even though he has resigned. But yeah, I've always said this, based on quantity, it's better than going for one particular asset. A lot of people will tell you, if you have $1,000, put 200 in Bitcoin, put 300 in Ethereum, and put $50 into this asset and so on. It's the most ridiculous concept of an idea you can have for a plan moving forward. If you have $1,000, not financial advice in any sort of a way, if you have $1,000 to $5,000 to $10,000, I wouldn't spend a single penny in Bitcoin. I would be diversifying that into other assets essentially below it that could potentially do incredible numbers on the regulations. So it's the dumbest idea when someone says to someone else, not saying you've said this, Happy Pies, in any sort of a way, but it's the dumbest idea that I've always been hearing inside the crypto space for years. If you have $1,000 or $2,000 or $5,000, put $2,000 in Bitcoin. $2,000 in Bitcoin will do you absolutely jack squat. But $2,000 in XRP will do you wonders. $2,000 in XLM will do you wonders. $2,000 in HBAR, $2,000 in XDC, $2,000 in AVAX, $2,000. And the list can pretty much go on of how much money you could potentially be making. But putting $2,000 in Bitcoin will do you absolutely jack squats. Unless you have a ridiculous portfolio of millions and millions and millions and millions of dollars to your name, I wouldn't even suggest going towards Bitcoin or touching with a 10-foot pole. You've got to be thinking about, do I want to make money, or do I want just the title of me owning Bitcoin? And potentially you don't even own one Bitcoin because you own a drastically small amount of Bitcoin with $2,000. But I always hear that argument inside the crypto space. If you have $2,000, put, $1,000 in Bitcoin, put $300 in Ethereum. $300 in Ethereum will do you jack squat as well. $300 in XRP, XLM, XDC, HBAR, ACH will do you amazingly. But $300 in essentially Ethereum will do you absolutely nothing. So aim for those crypto projects, because those crypto projects can be potentially a lot more better on the regulations moving forward, because the massive list of partnerships and licensing they already have, which will make it easier for them to be adapted much more quicker on the regulations of banks and institutions to get involved. So what you said regarding your second part of your question, which was versus the thousands of dollars that you can, essentially put in the other crypto assets, is what I would say. Put in other crypto assets. Don't go for Bitcoin. Nothing wrong with Bitcoin. It's a great reserve asset, but if you don't have millions to your name, don't even touch it with a 10-foot pole. What up, Miles and family? Hope all is well, though. Ray, good to see you, brother. How you doing? How you been? Is it true that Musk is raising 104 billion for XRP? No, it's rumors that's going around, not confirmed news in any sort of a way. At what price would you stop buying XRP? Great question. 3 figures. Even the Miles and CMF peeps. And by the way, when I said 3 figures, it's not overnight type of situation, but I want to say when it reaches 3 figures is when I stop buying it. Hi, Miles and CMF. Stormy, good to see you. Well, how you doing? How you been? Hello, Miles and CMF. Carol, good to see you. Well, how you doing? How you been? Happy Turkey Day. Let's go, Semper. BTC can't go to zero even if everyone sells their BTCs, because 70% of BTC is lost and no one have access to it. True, but if everyone, first of all, everybody can't sell their Bitcoins because the Bitcoin network essentially will get congested. The idea that everybody can even sell Bitcoin is not going to be working out very well, because Bitcoin network will get congested too easily, which means nobody's payments will process, and it could take days or weeks for anyone's payments to be processed. And if it gets congested too much, then payments won't process at all. So the ideology of everybody can sell, if everybody sells Bitcoin and goes to zero, it won't be working out very well because the network is congested. But let's just say if the network doesn't get congested and the payments processed through, even if 70% of Bitcoin is still lost, there'll still be no value in the pot. So it technically can go to zero, but it's difficult because it will get congested, which means no payments will process. Trump is good. Facts. Let's go, Charlie. Would you recommend holding through the bull run for utility? Hell yes, that's what I'm going to be doing. This isn't just your typical bull run, as I've said previously. I've been saying this since the end of 2023, that 2024 is when the world starts shifting into a digital space, which was all true. January 2024, we had the first ever Bitcoin ETFs. Moving forward, we had more ETFs we had more institutions coming inside the crypto space. We had more announcements from banks. We had more announcements from institutions. We had more announcements from venture capitalists entering the crypto space and so on. So 2024 was essentially the start of the MiCA regulations, as well as the start of paperwork for the crypto space, for utility-wise. 2025 is when we start going to utility, because now the biggest market space in the world is going pro-crypto, which is incredible news. But you've got to realize that this isn't just your typical bull run. We're going into regulations. We're going to banks, institutions, and regulations. Well, the biggest market space in the world is doing this for us. The rest of the market space around the world are also going to be following them as well. So the main essentially point of a crypto asset is utility. The main point of a crypto asset isn't buy, sell, quick profits. It's utility, which a lot of people tend to forget. The whole point of cryptocurrencies in existence is utility. It's not buy and sell quick profits. That's stocks. If you want to buy and sell, go to the stock market. If you enter the crypto space, you're entering for utility purposes, unless you're somebody who just wants to trade quick on meme coins. But a genuine person inside the crypto space is in the market space for utility. So when that market space reaches the utility pot, is the last thing you want to do is sell your utility assets on the regulations, because 2025 is just a start. 2026 is going to get even better. 2027 is going to get even better, and so on as the years go by. And you don't even have to sell. For example, my XRP or XLM, XDC or HBAR, I'm just going to be borrowing against them, use them as collateral to skip on tax. So you don't have to even sell them. Just borrow against them, use them as collateral. You could do that for HSBC Bank. They're offering the service in Hong Kong for the time being into the high-profile clients, but they're going to be offering to everybody else. It's just for test periods they're offering right now. Hello, Miles and CMF. Glenda, good to see you. So how you doing? But yeah, I'm not going to be selling my utility projects whatsoever, because we're in a different run. You've got to understand that a lot of crypto projects are also going to be splitting themselves up from Bitcoin, because what I mean by that is Ripple, for example, has contracts with banks and institutions. HBAR has contracts with banks and institutions. XDC, similar path, and so on. Bitcoin doesn't have the contracts that Ripple has. Bitcoin doesn't have the contracts that HBAR has, or ACH has, or essentially Neo Protocol has, or Solana has, or whatever. Which means a lot of crypto assets, under rules and regulations and due to their own utility and partnerships and licensings, they're going to be going on their own separate paths. So the ideology of crypto assets following Bitcoin's footsteps for the rest of eternity is false. That's misinformation inside the crypto space, that people believe that crypto assets are going to be following Bitcoin's footsteps for eternity is incorrect. Once the utility comes in due to rules and regulations, every crypto project has their own partnerships going in place. So once that project is being used for its utility purposes, Bitcoin doesn't have the contracts that Ripple does have in play, or HBAR has in play, and so on. So HBAR is going to be going on its own separate path. XRP will go in its own separate path. They're going to be detaching from the whole point of following, they're going to be detaching from the whole follow Bitcoin to end of eternity is going to be ending very soon, actually. They're all going to be going on their own separate paths due to their own contracts and essentially licensings, due to regulations being in place. So that's the whole point. The whole point of crypto, the whole point of blockchain was utility, not buy and sell. So once we're about to reach utility, the last thing you want to do is sell. Hello, Miles and CMF. Glenda, good to see you. So how you doing? How you been? I only buy BTC. I only buy BTC on 10x plus leverage, not buying any spots. Fair enough. Why not? Miles, price prediction on Hulu 2024. 2024 won't do much movements. 2025 is when you see Hulu starting to do movements. It will still do well. It should reach, what is it right now? It should reach a cent if it's not reached it by now. 2 cents, 3 cents maybe. If not, but 2025 is when Hulu starts showing itself. Good day, Miles and Mike. Good to see you. How you doing? Evening, Miles. Can you explain a retest? Will XRP experience this? A retest basically reaching its price points before. Yes, it's definitely going to be experiencing it 100%. Reaching the price points it was at before, the highest price point it was sitting at before. Good evening, Miles and family. Alex, good to see you. How you doing? How you been? Miles, is Casper and Dot a good project? Casper is a utility it's got a utility aspect to it, but Casper is a retail project, is what I was trying to say. It's not an institutional project. There's no institutions backing Casper in any sort of a way. It's just a retail section. The issue with projects that don't have partnerships in place with institutions is at one point they're going to be reaching some sort of a glass ceiling. So projects inside the crypto space that only have retail money inside of it, at one point it's just that project's just going to be reaching a glass ceiling, which means it won't even go higher above that, because the retail section will either lose interest, which will withdraw their money and go to another project, or they don't have enough money to push it beyond that. But if they can get a contract with them, if they could get some sort of major institution, for example, IBM, to adapt their project into them, then it's going to be able to break that glass ceiling and go higher, not overnight, but over time. So Casper doesn't have any sort of massive institutions standing behind or any sort of licenses in place. If it does get great contracts in place and regulations coming towards us, it could do very well for itself. But for the time being, it doesn't have any massive institutions backing it in any sort of a way to show signs of adoption. Retail is right there for it. Retail is behind it, but that's not enough. Retail money is the worst kind of money because it's flaky. You see institutions enter a crypto project and they sit there within that crypto project for 5-year projections or 10-year projections or 15 or 25-year projections. That's the only reason why when people were screaming and shouting, Bitcoin is going to go to $20,000, and it never did, I said it was never going to do that either. I was against everybody inside the crypto space when people were saying Bitcoin will go to $20,000, and I said it's never going to happen. I said the reason why it's never going to happen is because institutions are entering into Bitcoin through ETFs, and they're essentially holding the 5-year projections and 10-year and 15-year, 20-year projections. Due to that, the price of Bitcoin shouldn't be dropping to $20,000. Now, the issue with projects like Casper, essentially retail money, mostly retail money being inside of it, is retail money is flaky. Because people inside the retail section lose interest after 6 months on a crypto project or any sort of asset and just go to another asset. But institutions enter a project or an asset and they sit there for 5 years minimum as a projection. 25 years, as some people say, essentially as a projection inside the institutional space. So retail money is always flaky. And a lot of people always say that institutions want to push out the retail section. They want to push out the retail section. Yes, some manipulation is sometimes there, but the retail section tend to push themselves out of their own positions. Institutions don't need to really do that for them. But look, Casper, good project, but it's mostly retail money that's spending inside of it. That could be very risky because retail could lose interest and go to something else. If Casper lands itself in a massive institutional contract, then it's a great project moving forward on the regulations and so on. But if it's just retail money spending inside of it, it's got an expiry date, to be fairly honest. Dot, good. They have a lot of essentially contracts in place and so on, but there are better projects above it, but it has at least contracts in place. Miles, when BTC dominance comes down, does that mean that the price will come right down as well? Yes, it wouldn't come right. Yeah, but yes. And 1 cent by this year for hold is great. It is, I'll be fairly honest. I think it reached 2 cents in the last cycle, to be fairly honest, regarding HOTS. XRP at $2 now, but will it retest the downwards motion before going up again? Possible, yes. Yes. Good evening. How you doing, Davey? How you been? Hi, Miles and CMF family. Peg, good to see you as well. How you doing? How you been? Good evening, Miles and CMF. Ghost Burner, good to see you as well. How you doing? How you been? I see influencers starting to push LCX again. Influencers are pushing LCX again. I can remember when it was a time period where crypto influencers were pushing LCX and they were saying LCX will do 700x, 1000x, and it never did. And I told everyone it's never going to be doing that either. And the biggest selling point for LCX was people were saying, oh, it's LCX is regulated. LCX is regulated. LCX was regulated in Liechtenstein, not the United States. And I said also that just because a crypto project is regulated in Liechtenstein, it doesn't mean it can't be a security inside the United States. And what do you know? About 7 months after I said that, the SEC declared LCX through one of these crypto cases a security project. The SEC did, Gary Gensler. But yeah, LCX, if anybody thinks even for a second, LCX is regulated. LCX is not regulated inside the United States. It's regulated in Liechtenstein, which means absolutely jack squat outside of Liechtenstein. Just want to put that in perspective. Which network is better for ACH, ETH, or BNB? BNB by a mile. But ETH is what mostly it operates on. So just a heads up, ETH is what it mostly operates on. So that's where all the liquidity is. The reason I said BNB by a mile is because BNB is cheaper on network fees, but ETH is where the liquidities are for ACH. Now, let's go through this report that's just came out today. Analyst speaks after today's recovery on Bitcoin, and here's what they expect. So this is a new report that came out essentially from Galaxy Digital's firm. Bitcoin rose above $96,000 again today, recovering from a brief pullback that interrupted essentially its rise to record highs earlier this week. The renowned momentum comes as investors become increasingly optimistic about the largest cryptocurrency potential to reach the $100,000 milestone, fueling excitement ahead of the US Thanksgiving essentially holidays. Alex Thorne, the head of firm-wide research at Galaxy Digital, expressed confidence in the ongoing bull market. In a report published today, he noted that while corrections are a neutral part of every rally, the broader outlook for Bitcoin remains robust. There will be adjustments and disruptions, which is normal, Thorne said. There are many, even some seasonal regulatory or law enforcement actions by outgoing Biden administrations that makes the markets nervous. But the combination of increasing institutional, corporate, and potential national adoptions, a new US administration shaping up to be very pro-Bitcoin and pro-cryptocurrencies, and a solid position and network data points to higher prices near term and medium terms as well. Bitcoin is not facing any resistance at current levels, with supports estimated at around $74,000. Fair Lead Essentially Strategies founder Katie Stocken told CNBC, Bitcoin tends to steer up both down and up, meaning it seems that that there are very sharp spikes and consolidations in between. He advised investors to be prepared for volatility and considering Bitcoin's long-term growth potential instead of short-term moving forward. So that is basically a new report that's just came out from Galaxy Digital, a massive firm, and their predictions are moving forward. Expect volatility always inside the crypto space. In any market space, expect volatility. But moving forward, it's still looking very bright. And it definitely is. And again, this is another report talking about the only reason moving forward, everything's going to be quite jolly, is due to regulations and due to the essentially Trump administration. They did mention in their report that the Biden administration might try to stifle crypto just a little bit before they, leave the house. I could probably see that coming. Gary Gensler trying to pull the plug on something before his resignation day on January 20th. It's possible. These people are very spiteful. Gary Gensler is very spiteful and annoying and is just like a little weasel. Sleepy Joe isn't all there sometimes, but Kamala Harris, OnlyFans Kamala Harris, she is also quite spiteful as well. So you never know, maybe through the Biden administration, she might pull something negative and then later on blame it on Trump, because that's what they do. The Biden administration does everything essentially wrong. And then when they get caught out on it, they say, oh, it's Trump's fault. I don't know how. When we're under the Biden administration, how is it Trump's fault? But somehow the news makes it that it's Trump's fault, even though if the Biden administration messes up. But yeah, they could pull something maybe. Now, moving on from Galaxy Digital's report to Jim Cramer, or Jim Cramer essentially, but I like to call him Jim Cramer because everything this man says, it pretty much the opposite happens. About 90% of whatever he says is the opposite. Known for his wrong comments and shared his latest opinions on Bitcoin and cryptocurrencies, Jim Cramer essentially shared his latest opinions on the crypto space moving forward. Jim Cramer, on the host of the CNBC Mad Money, shared his latest thoughts on cryptocurrencies and the broader economic landscape in the recent episode. Reflecting on the national debt and historical fiscal policies, Jim said that he remains a believer in crypto as a hedge against economic uncertainty. In a segment, Jim reconsidered his stance on the market fall and essentially excesses, encouraging investors to consider taking profits on winning investments to lock in gains. However, it was his commentary on cryptocurrencies that sparked the most controversy. He said, "I've loved crypto for a very long time." Jim said, citing its potentials as a hedge against government mismanagements. While he acknowledged that there is currently no concrete evidence that cryptocurrencies can protect investors from such risk, he emphasized that its appeal lies in its theoretic. Sometimes in this business, that's all you need, he added. And it is true. Every time we have a geopolitical tension type of situation happening, the cryptocurrency market is supposed to react in a positive. The cryptocurrency market is supposed to react in a positive way. If we have geopolitical tensions happening, if we have two countries, if we have Russia and Ukraine throwing missiles at each other, the crypto market space should be reacting in a positive way, not negative, because it's supposed to hedge against that scenario. Or Bitcoin is supposed to react in a positive way because it's supposed to hedge. Because when a war scenario happens, gold becomes a risk-off asset. where it means it climbs up in price. It becomes a reserve asset. But when a war scenario happens, Bitcoin doesn't react the way gold does, which is go higher. Instead, Bitcoin goes lower and the cryptocurrency market follows it. So it is true up to a certain extent. So far, there is no concrete evidence of crypto being a hedge against geopolitical tensions because we haven't seen it yet. Whenever there's a war scenario happen, crypto market goes negative instead of positive because gold goes positive because it's a hedge against geopolitical tensions, it's a hedge against inflation, it's a hedge against pretty much everything, which is what the title Bitcoin wants, to be fairly honest, but it still hasn't got. It will eventually, in my opinion, without a doubt. Eventually it will. Jim compared today's financial landscapes to the Great Depression, citing the executive orders of 6102 issued by President Franklin D. 1933, which mandated the seizure of gold to stabilize banking systems. Gold was being seized back then. It's not impossible to think of something similar happening today. He won't. Jim is essentially telling the entire world on his news channel, Mad Money, that there could be a time period where governments start seizing your bitcoins, is what he's suggesting. Because of this historical precedent, Jim expressed confidence in Bitcoin and other cryptocurrencies as an alternative to gold, stating that they deserve a place in a diversified portfolio. Crypto is not easily confiscated like gold, but it can be, he said. However, he tempered his optimism by pointing out to the ongoing struggles of the US lawmakers to address the rising national debt. The issue is not that we don't know how to solve the problem. The issue is that the lawmakers lack the political will to make unpopular decisions. Jim said, referring to the reluctance to raise the taxes or cut spendings. He argued that this lack of discipline reinforces the view that digital assets can play as a crucial role in essentially preserving the wealth, which is all facts, to be fairly honest. I was talking about this yesterday, where I was saying, why are we choosing people inside of the government that refuse to do their job? Gary Gensler was chosen as the SEC chairman, but he refused to do his job, which was regulate crypto assets. The FDIC chairman was chosen as the FDIC chairman to overlook the banking system, but he refused to do his job. Instead, he stifled banks from getting involved in innovation when it came to blockchain. And the list just goes on, the amount of useless government workers we have that refuse to do their job, but still get a wage from the taxpayers' money. Jim also concluded by recalling his philosophy, I own crypto because these national debt concerns will never go away, perhaps in my lifetime. If that changes, I will reconsider. Until then, crypto will remain a hedge, in his opinion. I agree as well. It can remain a hedge moving forward, but for the time being, there's still no concrete evidence on that matter. But it definitely can be a hedge moving forward. Now, the next thing we're going to be talking about is moving on from that to CEO of VanEck. The CEO managing $118 billion predicts Bitcoin's peak is not yet in. Jan VanEck, the CEO of the global investment management giant VanEck, has predicted that Bitcoin's price could reach between $150,000 and $180,000 during this market cycle. Speaking in a recent interview, VanEck attributed his bullish outlooks to the continuation of Bitcoin's halving cycle, which has historically caused significant price increases. So while people inside the crypto space are telling you that the crypto influencers, in most cases, are telling people Bitcoin reaches $100,000 is going to be dropping head first, on the other hand, the institutions are telling you Bitcoin is going to go higher. He said, our thesis is that Bitcoin will maintain its halving dynamics. VanEck explained that he likened the Bitcoin to a value transfer network whose value increases as usage increases, as utility increases, noting that Bitcoin's value as a network remains the primary driver of its growth. VanEck drew comparisons to gold, noting that Bitcoin is steadily on its way to becoming a recognized store of value. He expressed confidence in Bitcoin's potential to reach half the value of gold in this cycle, projecting that the price target of $400,000 or more, depending on gold's valuation. Aimed at bullish trend in Bitcoin, VanEck underlined the growing importance of stablecoins, which he sees as the groundbreaking application for cryptocurrency industries moving forward. He also touched on the growing interest among institutional investors, and especially in regions where regulatory clarity is advancing, such as Asia and Europe. aimed at bullish trends in Bitcoin, VanEck underlined the growing importance of stablecoins, which he sees as groundbreaking applications for cryptocurrency industries moving forward. He also touched on the growing interest among institutional investors, especially in regions where regulatory clarity is quite difficult. VanEck also acknowledged the unique characteristics of crypto asset classes, particularly that is dominated by retail investors. While meme coins, VanEck is mentioning meme coins, while meme coins have gained liquidity and traction, he did not see them as a focus for institutional investors. We're going to continue on because there's quite a bit to read on this report. It's quite an interesting report from VanEck. But I just want to mention one more thing. As he said here, he said, this is VanEck, by the way, $118 billion, essentially, assets under management, on $118 billion is what they have. And he mentioned, while meme coins have gained liquidity and traction, which is true, he did not see them as a focus for institutional investors. I've been saying for a very long time, when people tell me, should I go? Look, what I've said to people for the longest time is, if you want to go for meme coins, it's your money. You can do whatever you want. You can go for cat token, dog token, frog token, camel token, donkey token, zebra token, giraffe token. It's your money. You can do whatever you want. But I've been saying for the longest time, we're going into regulations. We're going into banks, institutions, and regulations. And I said there's not a single institution lining up to buy camel token, but they all lining up to buy Bitcoin, Ethereum, XRP, XLM, XDC, HBAR, AVAX, Solana, Cardano, Near Protocol, and the list just goes on. Chainlink. There are institutions lining up to buy legitimate crypto assets. I've been saying this for the longest time. I said there's not a single institution that's lining up to buy Donkey token, but they're all lining up to buy legitimate crypto assets. And I said because we're going into regulations, which means clarity, which means banks, institutions come into play. And I said the easiest way to put it, because people tell me sometimes, shall I buy, cat token? And I say, for what? You want to throw money away? Because it makes zero sense for you to be doing that while we're going towards regulations, because you want to follow the money. If you want to follow the money, well, there's institutional money that's entering the crypto space right now. And if you want to follow institutional money, not a single one of them is buying Donkey token. And this is coming from VanEck. They have $118 billion of assets. And this is their own words. This is CEO's words. While meme coins have gained liquidity and traction, which is facts, they have gained liquidity and traction from the retail section and hedge funds. They like to manipulate the area. He did not see them as a focus for institutional investors. It's not something they would invest in. It's just common sense at that point. It's not a distraction either. Regarding other layer 1 blockchains like Solana and Sui, VanEck confirmed VanEck's active involvements in Europe, including launching token-based ETNs, noting that there have been strong inflows into these products, possibly signaling a return of bullish market conditions. Despite the optimistic outlook, VanEck noted that one concern, Bitcoin's high correlation with the Nasdaq, which he believes has discouraged some professional investors. The last thing people want is for Bitcoin to follow the Nasdaq, he said. VanEck also commented on the evolving regulatory landscapes, particularly in Europe and Asia, and he praised the proactive approach of the European regulators and contrasted this with the restrictive environments inside the United States, particularly in states like New York. He predicted the regulatory competition could intensify as countries compete to become the center of crypto innovation. Look, I've said this a lot of times, a million times, and I'll say it again. We're going into regulations. Do not get left behind holding Donkey token, because if we go into 2025 and beyond, we're going into regulations. That one of the biggest market spaces in the world is about to become the capital hub for cryptocurrencies. And every country around the world is going to be following their footsteps. Every institution, every bank is going to be following their footsteps. Even China, who's anti-crypto and anti-Bitcoin, is already processing some regulations. And every institution on this planet is going to be entering the crypto space. And not a single one of them is going to be going for Donkey token, 2025 and beyond. If we go into 2025 and you're somebody that's holding Donkey token, the only donkey in that scenario is you, because the institutions are going to be pouring their monies into Bitcoin, Ethereum, XRP, XLM, XDC, HBAR, AVAX, Chainlink, Near Protocol. And the list just goes on, the amount of legitimate crypto assets out there that you could be looking into. Yes, some of them are, a little bit priced high. But XRP is still cheap, XLM is still cheap, XDC is still cheap, ACH is still cheap, HBOL is still cheap for what they're potentially going to become. So there's a lot of crypto assets out, and yes, they do take longer to blossom and go higher. It's very honest. But what would you rather have? Money that's going to be coming towards you eventually, or money that's never going to be coming towards you? Because meme coins is like 1 to a billion chance. Do you want 1 to a billion chance, or do you want something coming towards you? Honestly, I've said this many times and I'll say it again. The only donkey holding donkey token in a 2025 year of, essentially in 2025 and beyond, with rules and regulations and banks institutions in play, the only donkey holding donkey token in that scenario would be you if you're holding it. If you're somebody that trades on meme coins, different scenario. But if you're somebody that's holding a massive portfolio of meme coins, it could end south. But also, there's some people that dabble with meme coins to put their profits into legitimate crypto projects. That's understandable. So if you're doing that, that's fully understandable. If you're trading with them to put the profits into legitimate projects, but if you're somebody just holding them, risky play. Now, moving on from VanEck's new report to a new blockchain firm that hasn't got a token, and I don't know if they are going to be coming out one, but it's an interesting one because they're inside the banking space. Partior lands $18 million from Deutsche Bank to boost global payments. Now, Partior is a fintech settlement firm. It's a blockchain firm. And they're working with the banking space, but nobody's ever mentioned them because they moved very silently. Not anymore. So they've raised $80 million in their Series B fundings. The fundraising involved Deutsche Bank participating as a streak investor at the end of the second run. According to the report, the first close had Peak XV partners leading with JP Morgan and 4 other entities participating. Jump Trading Group, Standard Chartered Bank, Tismi Bank, and Velar Capital Groups. There's a lot of institutions and venture capitalists behind this firm right now, Partior. With this fundraising done, the Singaporean-based blockchain-powered fintech will utilize Deutsche Bank's expertise and networks to consolidate its global reach. It will also expand its cross-border capabilities while developing a strengthening innovation function. Some of these include in-trays of FX swaps and just-in-time multi-banks payments. Partior, founded in 2021, has support from DBS Bank, Standard Chartered Bank, Timis Bank, JP Morgan Bank, Peak XV Bank. I mean, the list just goes on. The amount of banks and institutions behind this one blockchain project since 2021. The fintech delivers real-time clearing and settlements and provides user instant liquidity, transparency, and enhanced security. It also provides solutions to challenges and legacy payment systems like SQL processing. The plan is for Deutsche Bank to join Partior as a Euro and US dollar settlement bank. This reflects the bank's commitment to providing its customers with secure, scalable solution systems. This move mirrors the recent launch of DBX by Deutsche Bank. DBX is the next generation banking ecosystem targeted at improving services for financial institutions and clients. Some essential services that Partior's blockchain-based network addresses includes settlement delays, absence of transparency, industry inefficiencies, and high operating costs. The fintech essentially simplifies clearing services and settlements for banks and eliminating intermediaries. Partior operates a 24/7 network with real-time local currency payments and RTGS systems, which helps it carry out direct and indirect settlements flows globally. At present, it supports USD, Euro, and SGD. However, as a part of its expansion across the Americas, EMA, and Asia, it plans to add ED, AUD, BRL, Canadian dollars, Chinese yuan, Great British pounds, Japanese yen, MYR, Kuwait's essentially. The list of currencies this blockchain firm is right now going to be offering is extensive. Speaking on the collaboration with Partior, Patricia Sullivan, the global head of institutional cash management at Deutsche Bank, noted that the bank is willing to harness cutting-edge technology to enhance the speed and transparency and security of payments expected by clients and peers alike. The CEO of Partior assured that with Deutsche Bank support, they would speed up their mission to deliver seamless, secure, and instant cross-border transactions for financial institutions worldwide. So, if you wanted another blockchain firm to maybe look into something that has banks behind it and institutions behind it, venture capitalists money inside of it, they haven't released a token yet. I don't know when they're releasing a token, but it's something that you could keep on the books just in case one day they open their doors, the retail section, you're the first one through the door. They are called pods here. I'll put that inside the CMF Telegram group, inside the Telegram group of this live, which is, by the way, free for anyone to join. And I just want to say one thing on the whole meme coin situation. You know, honestly, it is your money if you want to do whatever you want with it. If you want to hold meme coins, don't go beyond 2% of your portfolio into meme coins. Hold a very small amount because they're very risky assets. I'm only saying this, and everything I provide is completely free of source. So you can, you know, take my opinion, you know, discourage my opinion and so on. But it's your money. You can do whatever you want with it. If you want to go to meme coins, I'm only saying this because I care about people. Just be careful when you go with meme coins. You might end up losing quite a lot of money that you could have put in other assets, is what I'm trying to say. So no hatred towards anyone inside the meme coin space, but I'm only saying this because I care about people. You might lose a ridiculous amount of money, so be careful when it comes to meme coins. If you want to be inside of them, be inside meme coins. Your money, your choice. But preferably it's better to follow the money, and the next amount of money coming in is institutional money. But again, your choice, your money. You can do whatever you want with it. Now, moving on, OKG research. The reverse on Trump trades, BTC as a hedge against inflation and BTC ownership. The report outlined the significant drop in BTC's price from all-time highs of over $99,000 to around $93,000. So OKG essentially released a report. OKG essentially is OKX exchange. They released a new research report talking about the market moving forward, talking about Bitcoin, talking about oil, talking about gold, cryptocurrencies. So we're essentially going to be going through this report right now. So the report highlighted the possibilities of recent geopolitical tension news suggesting a ceasefire between Lebanon and Israel. The news has mentioned that Lebanon and Israel are going to be doing some sort of a ceasefire situation. But what's odd is that this caused the crypto markets to decline when that news suddenly hit. And other commodities, including gold and crude oil, also plunged sharply straight after that news reached. Notably, BTC and gold and essentially regained some of their price momentum, so BTC gaining 2.10% and gold gaining essentially about 0.67%. Crude oil prices have still been down the past 24 hours, the same as yesterday. The research still pointed out that yesterday's market shakiness caused unrest among investors, but speculation is about the bull market was coming to an end. Just speculation, because in reality it isn't. However, the report outlined that the drop has seen as a result of several macroeconomic effects and factors that had a short-term impact being the key word here. OKG's research added that the liquidity coming into the market space currently would not allow an abrupt end to the cycle. OKG's research mentioned that the recent interest rate cuts initiated by the Federal Reserve, the Fed initiated the first cut on September 18th, cutting the rates by 50% and pushing the borrowing rates between 4.75% and 5%. The Fed rates essentially again this November was by 25 essentially basis points, lowering the borrowing rates to 4.50% and 4.75%. And the report explained that the Fed rate cuts helped BTC's balanced liquidity injection and hedging against inflation scenarios. Additionally, the firm confirmed that political unrest and economic volatility makes crypto assets, including BTC, a hedge against real-world risks. And OKG's research pointed out Trump's plans to use cryptocurrencies to weaken other cryptocurrencies. The firm further highlighted the incoming president's plan to make BTC the U.S. reserve asset. U.S. officials have also been campaigning for the international crypto regulatory frameworks to be a U.S.-led. Still, the firm outlined the skepticisms of some economists in the financial sector, expecting a financial crisis despite the rate cuts happening inside the United States. However, the report also cited data from Macro's U.S. recession index probability, which indicated a 24.9% probability of a recession happening. Right now, there's a 24.9% chance of a recession happening. The firm speculated, compared to the previous recession cycles, a financial crisis could be possible, and it could happen in about 6 months' time. The research cited data from the Q Cloud Chain Research Institution, highlighting that Bitcoin spot ETFs accounts for over 55% of total BTC supply. Research has shown, and data reports have shown, that 55% of BTC's total supply right now, spinning, is ETFs. According to the data, the ETF's current holdings have increased since their introduction at the beginning of this year. So for everybody out there that still keeps on claiming it's the retail section that's keeping Bitcoin where it is, definitely not. 55%, according to one data source, it's Bitcoin ETFs, not the retail section. The report also pointed out that the significance of crossing the 5% threshold in the financial world, and yes, the retail section can still buy Bitcoin ETFs as well, but in most cases it's the institutions on Wall Street that's buying the Bitcoin ETFs. The report also pointed out that the significant crossings of 5% thresholds in the financial world. OKG Research gave an example with the US Securities Exchange Commission, which demands that the shareholders with over 5% of shares are required to report to the commissions. The research firm also further highlighted the importance of institutional liquidity at the top to cryptocurrencies. OKG Research also confirmed increased adoption of BTC among US and Japanese-based companies. More importantly, about 17 listed companies have reported their BTC holdings or have had their board of directors approve BTC adoption as a combat asset. The firm mentioned that MicroStrategy as one of the top BTC companies in the US, as reported by Cryptopolitan. The Wall Street Asset Management Company increases BTC holdings by 55,000, more BTC worth around $5.4 billion. The purchase is not only that the company has made this month. On November 18th, MicroStrategy bought about $4.6 billion worth of BTC, bringing its total BTC holdings to 386,700 Bitcoins. OKG's research still noted that only 0.01% of global listed companies currently are holding it, and the firm added that the market was still in an elite experimental stage, which is all true. That is essentially OKG's new report. And OKG is basically OKX Exchange, and their new report on the market space. 55% of Bitcoin's total supply spending right now is Bitcoin ETFs. And that the geopolitical tensions inside the market space, ceasefire situation, a ceasefire should be a good scenario. For some reason, the market reacted bad again. But what was strange is gold reacted bad as well. And so they were trying to put some things in their report that just seemed a bit odd. That there's a lot of odd things happening. A ceasefire is a good scenario. That's happening with Israel and Lebanon. But the market didn't react in a positive way. Neither did gold for the first time. It was very weird. So that could be some manipulation going on there. Now, moving on from that to another company that's following MicroStrategy's footsteps, but also they have alternative crypto assets too. Japan's essentially Remix Point plays the Michael Saylor strategy to invest $3.2 million in Bitcoin. The pro-crypto Japanese business giant Remix essentially Point seems keen to employ the MicroStrategy by using its balance sheet to buy Bitcoin and other crypto holdings. See, this is a little bit different now because 8 companies right now are following MicroStrategy's footsteps. 8 companies are following MicroStrategy's footsteps, but they're all buying Bitcoin. This company doing things a little bit more different. They're following MicroStrategy's footsteps, but they're not only buying Bitcoin, they're buying alternative crypto assets as well. And I'll review which crypto assets they are basically buying into right now. By the end of 2024, the company will invest $3.2 million in Bitcoin as a hedge against depreciation and also other crypto assets. According to official statements by local media outlets, the company will spend the colossal amount of 500 million yen to buy BTC in a street move that follows a growing institutional trend in the cryptocurrency sector. Firms are using Bitcoin as a hedge against the depreciation of fiat currencies. The firm stated, by buying cryptocurrencies, we will offset currency fluctuations and prepare for future market volatility. The move by Remix Pot won't be the first time the company is entering inside the crypto space and playing the Michael Saylor strategy. Last September, the firm spent over $5.3 million to buy different cryptocurrencies, including Bitcoin, Ethereum, Solana, AVAX, Reports indicate that Remixiport also holds a sizable amount of prominent cryptocurrencies, namely XRP and Dogecoin. Look, I want to mention this about meme coins as well. If you're going to go towards meme coins, there's only three you should be really aiming for. One is Dogecoin because of Elon Musk. Elon Musk will always promote Dogecoin no matter what. So if you want to go, if you're somebody that loves the idea of Dogecoins, loves the idea of meme coins, Dogecoin, go for it. Shiba Inu, go for it. What's the other one? Luna. Beyond these three meme coins, I wouldn't touch anything else. But, you know, your choice, your money, your life. Now, during the last cryptocurrency purchase, essentially, last September, records indicated that Remixiport spent $4.22 million to purchase 64.4 million pieces and further $351,000 a piece to buy 130 ETH, 2,260 Solana, and 12,269 AVAX. The Tokyo Stock Exchange listed company then started it harbored plans to acquire an additional $10.5 million worth of Bitcoin, ETH, and altcoins. According to the firm's board of directors, the move was a part of a cash management strategy to use Bitcoin as a hedge against the depreciation of the yen. The Remixiport joins a growing trend of institutions within Japan and the rest of the world that are heavily invested in crypto assets. Like other essentially global fiat currencies, the Japanese yen is facing severe pressure due to international policies and the tough local economic conditions. Pundits believe that Remixiport decisions to consider Bitcoin as a hedge against depreciation could attract other local companies and help essentially place the country firmly in the leading position within the cryptocurrency space. While the company has yet to disclose their material impact of using the micro-sailor strategy, its financial statements, it greenlights the plan already, which they believe is illogical as a hedge against the yen depreciation situation. That the Remixi financial statements doesn't show any gains from the $5.3 million already spent on earlier Bitcoin purchases, and it doesn't seem to have deemed the company essentially desire to diversify its balance sheets and reduce yen-dominated holdings. However, the micro-sailor strategy reflects a growing institutional trend where firms are integrating crypto into their conventional financial frameworks. The strategy seeks to leverage BTC unique characteristics to optimize a firm's financial operations and offer additional value to shareholders. The formula for that highlights an emerging trend within the financial management landscape where cryptocurrencies play an increasingly integral role. Saylor himself is on record stating the significance of using innovative financial strategies in navigating the intricate essentially of modern market spaces. So, Michael Saylor strategy once again being used by another company now in Japan. Again, in Japan, to be fairly honest, a lot of Japanese companies are following the MicroStrategy footsteps, but it's just once again another indication of companies following each other's footsteps. The corporate sector will follow each other's footsteps always. Once one corporate decides to enter into any new market space and it does very well for itself, the rest of the corporates will follow their footsteps. And I said you can apply that same theory to an entire country becoming a pro-crypto country, a capital of cryptocurrencies, United States market space. They become if the United States market space becomes the capital of crypto, every country is going to follow their footsteps because no country wants to be left behind. So America becomes the capital hub. Every country is going to follow their footsteps. Every bank, every institution is going to be following the American institutions, the American banks. It's going to be one wild year. 2025, I mean, the next 4 years is going to be all about making money. If anybody tells you we're going to be going a little bit more higher and that's it, the bull run is done, they have zero clue of what they're talking about. What I can say to you is 4 years of making money. We're heading towards 4 years of making a ridiculous amount of money if you position well. JP Morgan predicts the S&P 500 will hit 6,500 by 2025. And they're saying that this is because of AI. But before we go through that news, let's go start the comment section first. If you do have any questions, as I said previously, this is a live, which means if you do have any questions, put it down in the comment section. I'm more than happy to answer any questions you may have. So let's see where we were at. Is the ceasefire good for the market? It should be, but the market didn't react in a positive way, which means the manipulation is quite strong. Which network is already another one? Hi, Miles, just seen your message. Thank you so much once again. Appreciate it. No problem, Shark. Anytime. Let's hope Jim is not saying anything good about XRP. Yeah, everything he does say does tend to go the opposite way. What is that? Tony, I don't know what you're talking about. Or you could win a lot of money. Yes. If you live in La La Land, you can also win a lot of money. Hi, Miles and CMF. Miles, what usually happens to the markets during Thanksgiving weekends? They tend to climb. While Tangent eventually supports RLUSD. While Tangent eventually supports, will Tangent eventually support RLUSD? Yes, it will, definitely. Shiba Lunacy. Yeah. Look, honestly, if you're somebody that loves the idea of meme coins, Shiba, Doge, Shiba, Lunacy. Other than that, I wouldn't go beyond that circle. But again, your money, your choice. Preferably, it's better to be in legitimate crypto assets. But if you really, really love meme coins and you really want to be in the meme coin space, don't go beyond Doge, Shiba, Lunacy. Not recommended, but if you really love meme coins. Now, JP Morgan predicts S&P 500 will essentially hit 6,500 by 2025, driven by AI. JP Morgan forecasts that the S&P 500 will surge to 6,500 by 2025. The bank's top analyst credits artificial intelligence, economic resilience, and essentially the delegation for this bullish outlook. The target represents an 8% rise from current levels, driven by AI essentially related spendings and a business-friendly environment. The analyst points to the US as the global growth leader, supported by a strong labor market and increasing capital markets activities. The business cycle is expanding, he said. AI is already fueling investor enthusiasm. US equities have soared 26% in 2024, with Nevada up 176%, and Meta platforms climbing 62%, lower interest rates following Federal Essential Reserve cuts in September, and households sitting at $165 trillion in wealth have further boosted market optimism. The analysts highlighted the delegations and AI as the main drivers of this growth. Investors expect lower taxes and reduced red tape followings because of Donald Trump. Donald Trump is the reason why the stock market is getting excited. Institutions are getting excited. The S&P 500 jumped 4.1% since November 5th, reflecting the optimism. The analyst also believes that delegations is underestimated and could unlock major productivity gains. Key stocks benefiting from AI include Coinbase, Alphabet, which is Google, and YouTube, Microsoft, ExxonMobil, Tesla, Toll Brothers, and Citigroup. Capital spendings on AI continues to broaden the supporting stronger deal activity across markets. Wall Street essentially firms agree on a bullish 2025 outlook. UBS Bank predicts that the S&P 500 will hit 6,400, while Goldman Sachs and Morgan Stanley match their target at 6,500. Deutsche Bank remains most optimistic, projecting 7,000 by the end of 2025. I mean, it's all because of Trump. This is why I said, thank God Donald Trump won. The Federal Reserve rate cuts are helping inflation approach its 2% target. Over 100,000 jobs were added in nearly every month. The lying are the thieves for that one. Households are benefiting from record, essentially high wealth, which increased by $10 trillion in last year and $50 trillion since the pandemic. The analysts also acknowledge the geopolitical uncertainties, but seems more opportunities than risks. He expects a favorable policy environment to boost the capital deployments and drive productivity with AI innovation surging as a regulatory burden is easing. JP Morgan's forecast paints on the future that's heading towards us for the S&P 500. So it's not only just, the crypto market that's going to be benefiting extensively well because of Donald Trump. Also the stock market as well. I mean, Wall Street is ecstatic. As I explained how taxes work yesterday, regarding tax cuts on corporations. Tax cuts on corporations are the best idea possibly. When corporations don't pay heavy taxes, they tend to hire more people and give out more bonuses and more money circulates in the company. When corporations pay heavy taxes, that money tends to go in the government's pocket, which will never reach your pocket because people assume corporations paying heavy taxes, that means money from corporations will be somehow handed through the government into the people, which is false. If corporations pay high taxes, that money goes straight into the government's pocket, which ends up in Zelensky's pocket in Ukraine. In reality, corporations paying less tax is actually better when they get tax cuts, because they can hire more people, they can the money circulates more within the company grows, the people within that company get more bonuses, wages increase, and so on. Corporate tax cuts are great. Don't ever in your entire lifetime let the media tell you that corporate tax cuts are a bad thing. Corporate tax cuts are a great thing. When companies pay less taxes, they have more money to spend on employees. They have more money to expand operations and hire more employees. They have more money to increase wages. When corporations pay heavy taxes, that money ends up in the government wallet, which then ends up in Zelensky and Ukraine wallets. It never goes in your pocket. When corporations pay big taxes, it never goes in your pocket. But the government will make it look like it does by lying to you. The entire campaign for Kamala Harris was corporates have to pay the taxes that they haven't paid. And the people, around Kamala Harris supporting her, brainwashed, obviously, supporting Kamala Harris, people say, yes, corporations should pay their taxes. Why don't they pay their taxes? If corporations paid their taxes, that money is never going to be reaching you. That money is going to be going to Ukraine. That money is going to be going to random wars and so on. So that money from the corporate is never going to come to your pockets. So I don't know what you're even, shouting and screaming for. Because honestly, the amount of people I saw supporting Kamala Harris with signs saying corporate taxes, corporations should pay their taxes. You must be utterly brainwashed to even assume for a second that any of that money from the corporation is going to be coming into your pocket. Because that money is going to be going to the government's pocket, not your pocket. So you're fighting for the government to become wealthier and more greedy. How dumb do you have to be? Really, genuinely, this is a question to those people. How dumb do you have to be to even assume for a second that that money is going to go into your pocket? That money ends up in Biden administration's pocket and then Zelensky's pocket in Ukraine, which I'm guessing he spends it on his wife, because this is the longest war coming out of a very tiny country. Talking about Ukraine and Russia, the Russian ministry proposes 2-year transition for digital ruble adoption. Russia is coming up with their CBDC in 2025. They're not the only ones. A lot of countries are releasing their CBDC in 2025. The Russian Ministry of Industries has suggested a 2-year transition period before mandating that payments made using the digital ruble, the central bank digital currency CBDC, due to concerns over readiness of existing infrastructure, according to Russia's state-run media outlet. So here's something interesting. Russia, when they were first talking about CBDCs in 2023, they said that when they released their CBDC, it's optional. Russia said when their CBDC comes out, it's optional. I said they're full of crap. I said every country introduces the idea of CBDCs as optional. Because if they say CBDCs is mandate, people go, no, I don't accept it, and they'll run to the banks, take out their money, which will cause a bank run, which will make the banking system collapse, which means they have to lie to you. There was also a time period where the Bank of International Settlements governor suggested maybe freeze everybody's bank accounts when you release CBDC, so nobody runs to the banks to pull their money out. So that's why you're having a lot of people are having difficulties getting money out of the bank nowadays. That's one of the reasons. But I also said another thing that's happening is more banks are closing down, more ATMs, more cash points are closing down, and a lot of places don't accept cash already. So this ideology of CBDCs are optional and cash can work alongside CBDCs is complete BS. We don't even have CBDCs yet in a list of countries. We don't even have CBDCs yet. And everywhere around you only accepts card. There's a few places that might accept cash. But if you go to a restaurant, bar, gym, cinema, anywhere you would go to, it's sorry, sir, or sorry, ma'am, no cash, card only. And we're not even in CBDCs yet. They're already pushing cash out. Banks are closing, cash points are closing, and nobody around you, any business, would accept cash. But they keep on telling you on the news, oh, when CBDCs come out as optional, cash and CBDCs alongside each other. CBDC is not being released yet. Cash is being pushed alongside, to the sidelines. And now, fast forwarding to what I said in 2023 to today, where Russia comes out and says that within 2 years, their CBDC will be mandated. So it went from optional to you have to use it. The Russian Ministry of Industry has issued a warning regarding a draft law that requires large retailers to adapt digital route payments by July 2025. What happened to Russia in 2023 when they were saying it's optional? If you want to use CBDCs, use it. If you don't, use cash, is what they were saying in 2023 when I said they're full of crap. Every country will tell you it's optional. You don't have to use CBDCs. It's optional. You can use cash. And, again, that was what I said in 2023. Fast forwarding to now, today, with Russia saying it's going to become law that you have to, every large retailer has to adapt to CBDCs by July 2025. I'm guessing if you don't, you get a massive fine or a prison sentence. They expressed concerns that this legislation may present significant challenges for business, but they couldn't care less. According to the proposed law, large federal retailers must start accepting digital route payments by specified deadlines. And if you're wondering, well, this is related to Russia, what does it have to do with me living in Europe or you living in the US or so on and so on? It's something that's going to be happening worldwide. Mandate CBDCs, businesses have to abide by CBDC laws and so on. That's going to be happening worldwide. It's not Russia use only, it's worldwide scenarios. This span out of China regarding CBDCs. CBDCs came out of China. Social credit systems came out of China, or they're calling it carbon footprints. Same shit, same thing. But what's happening in Russia, again, it's just what's going to be happening worldwide. Mandate situations. They'll come out with the concept, it's optional, don't worry about it. And when the time comes around, it's mandated. Essentially, according to the proposed law, large federal retailers must start accepting digital route payments by specific deadlines. At the same time, smaller companies may face a delayed implementation based on their annual revenues. The Ministry of Industries responded to the government's proposal by highlighting the absence of clearer operations and guidelines for a digital route. They stressed that the importance of additional time to finalize software, update information systems, and conduct testings, and strain staff, advocating for a 2-year transition period to address these issues and allowing businesses sufficient amounts of time to adapt to the new payment system. This news essentially comes after Eliver, the governor of Russia's central bank, announced that if the pilot programs for the digital route are successful, mass implementation could occur by July 2025. Mass implementation in Russia. As a new move, because India has released CBDCs, for example, but they're releasing small portions. A lot of countries have released CBDCs and test trials in small portions, but Russia is aiming for mass adoption in 2025. She noted that the transition would be gradual and a full adoption of the central bank digital currency could take place, depending on the needs and convenience of business and consumers. And for everybody to be fully in it within Russia, it could take essentially a few years, but mass adoption is happening in essentially July 2025, by July 2025. Meanwhile, a Russian lawmaker and a chair of Parliament's financial committees predicted that the rise of blockchain technology and the digital route would gradually reduce the role of traditional banks. Speaking at the media forum, he noted that while private banks may continue to play a role in the digital finance ecosystem, their traditional functions will likely diminish over time. Private banks will diminish over time, which means central banks will continue forward and public banks can also continue forward as long as they have any sort of blockchain contracts in place. I said this before, not every bank is going to be closing up shop. If there is a bank out there, for example, let's just say HSBC Bank, they have a blockchain contracts in place and so on, they could pretty much survive this whole blockchain wave because they adapted. It's very simple. It doesn't matter if you're somebody from the retail section or if you're somebody from the corporate section. If you don't essentially adapt to the times that's coming towards you, then you just get left behind. You could be somebody you could be somebody that's a retail person, or you could be somebody that's from the corporate sector. Doesn't matter. In this case, a bank. If you're a bank that's adapted into this whole blockchain sector by making contracts and signing partnerships and getting involved with Ripple or HBAR or ACH or whatever, then your chance of survival has just been higher because you decide to move with the times. But if you're a bank that decided to do absolutely nothing and stick to their old ways, then obviously you're going to be disappearing off the face of the earth. It's very simple. So everybody who assumes every bank will disappear, not correctly every bank, no. The ones that have contracts in place will survive and eventually probably turn into fintech firms. Now, Vancouver is what we're going to be talking about next, and it's the Vancouver mayor. He's planning to introduce a Bitcoin-friendly city. But before we get through that, let's go inside the comment section. First, as I said previously, this is a live, which means if you do have any questions, put it down inside the comment section. I'm more than happy to answer any questions you may have. So let's see what questions we have. And then we go straight inside the next news, which is regarding Vancouver becoming a friendly Bitcoin and cryptocurrency city. So, and Thomas, let's go. Can a UK company buy crypto on their books? Yes, but only if they're regulated by the FCA, Financial Conduct Authority. I'm trying to utilize them for profit to put it into ISO projects. Let's go, and Thomas. Why not? Honestly, if you're buying crypto assets and if you're buying meme coins and and the only reason you're buying meme coins is to put the profits into legitimate crypto assets, why not? If you want to do that, why not? Because you can make quick money and put it into legitimate crypto assets. So it's a good plan if you want to do that. Risky plan, but why not? Your money, your choice. So what N. Thomas is doing, he said, I'm trying to utilize, his meme coins for profits to put into legitimate projects. It's a great idea. Sorry, UK LTD company, not PLC. It still has to be regulated by the FCA. So that company has to have some sort of regulations in place. Woohoo, next 4 years sounds like a plan. Let's go, Troy. All facts, though. Thank God Trump won. Let's go, Ray. When businesses pay more taxes, they are focused. When businesses pay more taxes, they are forced to put prices up so they can cover the extra tax. So the ones who pay for the cost is us. Yes, that's true as well. Even if you have a small business, the less tax you pay, the more money it leaves you to invest in your own business. Some businesses are struggling because of the amount of tax they have to pay, which is facts. Is that Vancouver, Canada? And Thomas says yes, and it is. So Canada is going to be having a Bitcoin city, you could say. The proposed plan by Vancouver's mayor, Ken Sim, for the city's diversification of financial resources suggested an investment in Bitcoin as a reserve asset. You see what Trump has done? Something great, as always. Trump mentioning a Bitcoin reserve asset for the United States. Brazil wants to do a Bitcoin reserve asset. South Korea is thinking about doing a Bitcoin reserve asset. Canada is thinking about doing a Bitcoin reserve asset. Going back to what I said, if every country adapts the idea of 5% supply of Bitcoin for a reserve asset, yeah, Bitcoin could definitely reach $1 million. Ken Sim, who served as the mayor of Vancouver since 2022, announced plans for the Canadian city to add Bitcoin to its balance sheets as a part of its efforts to diversify its investments. Vancouver City Council meeting, Mayor Sim submitted a notice of motion of intent to introduce on December 11th, titled Preserving of the City's Purchasing Power Through Diversification of Financial Resources, Becoming a Bitcoin-Friendly City, was the title of the document, of the filing he did. As of November 27th, the motion did not appear to be available on the city's government's website for now. Author Jeff Both said on X Spaces that the Mayor Sim's motion was intended to have Vancouver adapt the cryptocurrency as a reserve asset. Cointelegraph reached out to the Mayor Sim's office for a comment, but did not receive a response at the time of publication. It's unclear whether the Vancouver mayor's motion came in response to local and federal governments inside the United States considering legislations to establish a BTC reserve. That's most likely the reason, because they're going to be doing it. The US is going to be doing it now. Everybody wants to do it. Following the 2024 elections, lawmakers in both Pennsylvania's House of Representatives and the US House Senate suggested plans for the government to hold Bitcoin reserves as assets. During his mayoral campaign, a Better City Sim political party announced that it would accept crypto donations. At the time, Sim said that the move was to demonstrate the party's commitment to technology, suggesting that he would utilize cryptocurrencies in the city hall if elected. Vancouver residents elected Sim as their mayor in October 2022. However, he has rarely made public statements on adoption of Bitcoin or cryptocurrencies while in office. In the Global News interview released essentially November 25th, a copy of the book, The Bitcoin Standard by Anonymous, was presented in Simmons' office in Vancouver City Hall. Many crypto prominents have referred the book, first published in 2018, to essentially push ideas and policies towards Bitcoin adoptions. It's unclear whether Sim's proposed motion would have enough support to pass the mayor. He fulfilled more than 70% of the 94 points laid out in his campaign since taking the office 2 years ago. So he's achieved about 70% of that bill moving forward. Let's just say 94% is basic. 94 is what you need. Look, is he going to get the approval he needs? Is Canada going to be having a Bitcoin city or a cryptocurrency city? Yes, most likely yes. Reasonings why it won't. If it doesn't happen now, it's going to be happening when America announces it. When Donald Trump takes his seat around January 20th, and the plans move forward with a Bitcoin reserve and America becoming the capital of cryptocurrencies, then if it doesn't get accepted now for Vancouver becoming a crypto or Bitcoin city, it will when Donald Trump's in power, because Canada is going to be following America's footsteps. So it's either now or later, but either way, it's going to get accepted. Now, moving away essentially from some banks in British Columbia are also closing up, already closed. Thomas, thank you for the update, brother. Now, Foresight Ventures is opening up a new office at the One World Trade Center in New York. Why is this important? Well, Foresight Ventures, a global cryptocurrency and Web3 investment firm, has opened up a new office on the 77th floor of the iconic One World Trade Center in New York City. This move essentially signals the firm's commitment to expanding in the US market space, a key hub for blockchain innovation. The office will be a collaborative space for developers, Web3 enthusiasts, and industry stakeholders in partnership with its portfolio companies Morph, an advanced layer 2 scaling solution. Foresight Ventures aims to accelerate the adoption of blockchain technology across various industries. New York City, a global finance hub and technological innovation, presents a unique opportunity for Foresight Ventures to deepen its engagements with the US-based investors, regulators, and developers. With the US still leading in the blockchain development, accounting for nearly 20% of the global blockchain developers and attracting a significant share of blockchain fundings, the city offers an ideal environment for driving the future of Web3. Alice Lee, the head of North American investment partners at Foresight Ventures, shared her enthusiasms for this move. We're bullish about the future of crypto inside the US, especially as clearer regulatory frameworks emerge and more builders return to the region. This office is a tangible step towards empowering the next wave of innovators inside the space. Forrest Bay, co-founder of Foresight Ventures, echoed this same sentiment, emphasizing New York Street's importance for the firm's expansions. This move represents a critical step in bridging international expertise with the vast opportunities the US market offers for Web3 innovations. To celebrate the new office, Foresight Ventures Morph and the block-hosted event to connect with industry leaders, attendees included representatives from CoinFund, A16Z, Solano, Mondane, and Sixth Man Ventures. One massive, you could say, blockchain firm has just placed its office in the One World Trade Center in New York. The hub of financials is now occupied essentially with a blockchain firm that invests in the blockchains and so on. That's massive news, to be fairly honest. Before, that would have never happened. Again, this is because of Trump. And they're saying it's because of clearer regulations coming in 2025 is the only reason we're able to do this as a company. To be sitting alongside major establishments inside of New York, the financial hub, essentially. Wall Street, World Trade Center. I mean, this is just, from what crypto was essentially for how far it's come to what it is now, incredible. Absolutely incredible. It was the laughing stock of Wall Street, and now it's sitting alongside them. Now, and again, positiveness from Trump. Trump has not even taken his seat yet. January 20th, he takes his seat. And already there's movements happening, there's motion happening in place. The Chinese company, on the topic of Trump and on the topic of the US becoming a massive crypto hub, and on the topic of everybody's going to follow their footsteps, and it's just going to be 4 years of making money because they go pro-crypto, everybody goes pro-crypto. The Chinese company SOS Limited is investing $50 million in Bitcoin. Chinese are restricted from buying crypto assets due to regulations, and Chinese companies are also restricted as well. But again, America's going pro-crypto. Everybody's going to follow their footsteps no matter what. The Chinese company SOS Limited investing $50 million in Bitcoin. SOS Limited board of directors authorized an investment of $50 million in the company's Bitcoin acquisition. The announcement was published on their website. Bitcoin is currently experiencing the most significant gains, which has captivated the attention of numerous investors worldwide, encouraging them to participate in this bull run. The most recent update from SOS demonstrates the company's agreements with optimistic perspectives on the crypto industry. This momentum is a direct result of favorable policies and environments in the United States that is designed to support digital assets. It's the only reason this Chinese company is going to be investing $50 million into Bitcoin, because America is about to become the crypto hub. SOS Limited seems to believe that Bitcoin is not only the most valuable digital asset, but also the potential that has to be designated as an asset class for critical global strategic reserves. The CEO of SOS, Yanding Wang, expects this investment to add a competitiveness and profitability in the digital asset sector for the company's overhaul. He says Bitcoin's market performance is robust and supported by positive developments such as the launch of several Bitcoin-related ETFs and options and ongoing improvements inside the US regulatory environments for digital assets. The only reason, again, they're doing this, Trump. I said this a million times and I can never say it enough. Thank God Trump won. Honestly, it's just going to be 4 years of making money. 4 years of just making money because of Trump. It's going to be amazing. Absolutely incredible. Moving on, essentially, from this Chinese company entering the crypto space, something that a lot of people would never seen coming. And also, this Chinese company spending $50 million buying Bitcoin at these prices. A lot of people wouldn't expect that either. But I've been saying this for a very long time. Institutions have a lot of money. Institutions couldn't care less if Bitcoin is sitting at $150,000. If it still has potential, they're going to go for it. 21 shares, and this applies to any asset, not just Bitcoin. 21 shares unveils 4 new European crypto ETPs. 21 shares added 4 essentially ETPs to its Europe offerings as crypto fund issuers flooded the region with more digital asset investment products. More institutions are lining up for ETPs and essentially ETPs and ETFs, not just inside the United States, but outside the United States as well. The Swiss wealth manager introduced new exchange-traded products underpinned by 4 cryptocurrencies, including Python network. If you're somebody that's holding Python, there's a new ETP happening for that. Ondo, Render, and Near Protocol. 21 shares said that its latest additions covered price or corals, essentially asset tokenizations, decentralized computing, and artificial intelligence. Also, 21 shares will follow investors to reinvest staking rewards from Near into ETPs. Near's proof-of-stake blockchain model enables buyers to secure their network by locking tokens. The practice is called essentially staking and earns yields for participants. 21 shares noted that the reinvesting towards could improve its Near ETP performance and deliver bigger customer gains. All 4 ETFs will be tradable on exchange across Amsterdam and Paris, to name a few cities. Additions to the 21 shares crypto ETPs fleet were also announced weeks after the Switzerland-based issuers sought regulatory clarity. In October, the fund manager urged European watchdogs to provide clearer guidelines for retail, institutional, digital asset products and investors. Although the markets and the crypto assets and regulations created rules for stablecoins operators and exchanges, a gap remains regarding ETFs and ETPs in Europe. 21 shares opinion that the European Securities and Markets Authorities could bridge the gap and offer a comprehensive framework for all EU member states. In the meantime, the fund issuer also leveraged flexible policies on crypto stakers, and earlier in November, it rebranded its Ethereum core ETPs to include staking rewards as well, which is the one thing that's missing from the US Ethereum ETFs. If they did have staking rewards, it would do a lot more better regarding Ethereum. But more companies are applying for ETPs, something that we're going to be seeing a lot more of the closer we get to January 20th or passing January 20th because of Trump. Now, on the topic of ETPs, Bitwise is expanding its product line with XRP ETPs and crypto ETF proposals. But this is with a twist. Bitwise Asset Manager announced today that it's rebranding of its European XRP exchange-traded product, now called the Bitwise Physical XRP ETP, essentially GXRP. Hunter, the CEO and co-founder of Bitwise, emphasized the unique attributes of XRP and its blockchain. The XRP ledger, noting its reliability over the past decade. He said, this is from Bitwise's CEO. He said, we are thrilled to offer investors an institutional quality product with the Bitwise Physical XRP ETP. Institutional quality product is what they're calling XRP, which is exactly what it is, an institutional quality product. On the topic of essentially Bitwise announcements of an XRP ETP, Ripple, the blockchain giant, is backing Bitwise's asset manager's revamped physical XRP ETP. It's not just the announcement of an XRP ETP. No. Ripple's also backing this announcement. Now trading under the ticker of GXRP, the rebranding is a part of Bitwise's overhaul of its European product line following its August acquisitions of ETC Group. This physical-backed exchange-traded product offers European investors direct access to XRP. It was originally launched back in 2022 and it operates under a approved BaFin, Germany's financial regulators, but revamped. Ripple's CEO Brad pointed out that demand for crypto investment vehicles has exploded in 2024. He called XRP one of the most valuable, liquid, and driven utility digital assets out there, pointing to its real-world use in cross-border payments and tokenization. Since acquiring the ETC Group, Bitwise has been aggressively reshaping its portfolio to cater to the growing institutional interest. The rebranding of GXRP is a part of a larger strategy that includes launching innovative products like the Bitwise EP211 ETP, which began trading at 6 Swiss Exchange on November 19th. Additionally, Bitwise has filed for a Form S1 with the SEC, signaling plans to launch an XRP spot ETF inside the US as well. Bitwise has an ETP that's rebranded to essentially GXRP, with Ripple backing them outside the US. And in the US, Bitwise is applying for an XRP ETF. The company has seen remarkable growth in the 2024, crossing $10 billion in total assets. The CEO of essentially Bitwise credited XRP's decade-long track record and reliability. He said XRP's ledger is unique with over 10 years of track record and reliability, while continuing to expand in its capabilities, said the CEO of Bitwise. Bitwise's timing couldn't be even better. Ripple recently won in a regulatory clarity, and XRP's price has surged and has created an ideal market environment. XRP's value has skyrocketed 190%. in this last month, reaching $1.50 at its highest levels of 3 years. The surge came after Donald Trump's presidential win as investors bet on a friendly crypto regulations under his administration. And another major move is Ripple's preparation to launch RLUSD in its first stablecoin, and pending approvals from the New York Department of Financial Services. RLUSD is designed for international payments and tokenization of real-world assets. And Ripple is already working with many exchanges for RLUSD's rollout and formed an advisory board to ensure compliance. The company continues to expand its partnerships and secure licensings in key jurisdictions like Dubai. Meanwhile, XRP's recent market activity kept traders buzzing. On November 7th, Ripple moved $470 million XRP worth $250 million, a $4 million to unidentified wallets such as lost transfers, and as common as Ripple supports operations and liquidity for its on-demand liquidity ODL services. XRP's metrics rises has also triggered profit takings among investors. Over $1.5 billion in profits were realized in just 1 week, coinciding with a 6% dip in XRP's price on November 26. But we're going to be seeing a lot more XRP ETFs, Now, on the topic of XRP and Ripple, here is an interesting one. Trump's potential crypto Caesar predicts a Ripple case dismissal. If you're wondering what is that, essentially the Trump crypto Caesar, that is basically Trump's team. Trump is trying to create a team of people around him inside the blockchain sector that can be the blockchain advisors of the United States of America. And they're not just random people; they're also blockchain companies, which I revealed yesterday's one a few nights ago. But here is something: Uncle Sam will let go of Ripple. Everybody is very clear of who Uncle Sam is. But former Commodities Futures and Trading Commission (CFTC) chairman Chris, the former CFTC chairman Chris, a prominent candidate for the role of the White House crypto Caesar in the potential next Trump administration, voiced his expectations that the Securities and Exchange Commission (SEC) will abandon its litigations against Ripple and XRP. This is opinion from the former CFTC chairman, not just the CFTC employee, but the CFTC chairman, that the SEC is going to be abandoning the whole, essentially, XRP and Ripple case. In an enlightening conversation on Fox Business, he laid out his vision for the US crypto policies and speculated on the implications of Donald Trump's potential return to the presidency. Chris advocated for a unified approach designed to enable the United States to lead globally in cryptocurrencies and blockchain innovation. This discourse essentially highlighted an intriguing shift in the former President Donald Trump's attitude towards digital currencies. During his previous term, Trump emphasized achieving a 4% economic growth and frequently challenged agencies to contribute towards this target. Chris indicated that Trump's perspective has evolved, now viewing cryptocurrencies along with technologies like artificial intelligence and quantum computing as essential for driving significant economic progress. Trump's envisioned a second industrial revolution in America with crypto as the pivoting component. Turning to current legal struggles between the SEC and Ripple, Chris shared his insights before the commencement of lawsuits. He published a scholarly article asserting that XRP should not be classified as a security under the US law. His viewpoint partially resonates with Judge Torres' July 2023 ruling, which essentially determined that XRP's transactions are not securities. He said, "I penned an I deceived article arguing XRP was not a security under SEC jurisdictions." This is a former CFTC commissioner. A former CFTC chairman. The judge in that case supported this view, at least in part, Chris commented. Chris also discussed his stance on handling ongoing SEC cases post Gary Gensler's tenure. He stated regulatory bodies should consider dropping cases, whether they faced setbacks in trial courts or not. When asked if the SEC will retract its appeal against the Ripple case, he confidently said, I believe they should, and they will. I would even wager on that. This is once again, a former CFTC chairman saying he will bet that the SEC will drop the Ripple case completely. Chris also criticized the ongoing SEC chairman, Gary Gensler, mentioning his issues such as attention of talent, dismissed moral, and excessive enforcements. He pointed out that the federal court's sanctions against the SEC for dishonesty, which he claims this essentially diminishes the agency's credibility. Reflecting on the SEC's challenges, the talent has departed. Essentially what remains of those uninterested inside the office presence. Considering new leaderships at the SEC, Chris hopes for a chair for both extensive institutional knowledge and dedication to the innovation and crypto advancements. He also suggested Paul Atkins, a former law school peer, and Kevin Hassan as potential leaders. Chris also stressed the necessities of strict approaches to actualize the Trump's crypto policies and commitments. He proposed establishing a crypto council, which is pretty much what's going on right now, and underscored the importance of interagency collaborations involving tax authorities and the White House counsel's office. Much thought is required in the structuring in this alignments. With President Trump's vision, he concluded. At the time of reporting, XRP was valued at $1.45. So, Chris mentioning, ironically, Paul Atkins is what's the person that's been chosen actually by Trump, by the looks of it. Not confirmed yet, but Paul Atkins seems to be the winning choice for the SEC chairman. And Chris, the former CFTC chairman, says Paul Atkins is the best choice. Now, if you go by Chris's words, the former CFTC chairman, the Ripple case will be dropped. He said, I believe they should drop the Ripple case, and they will. Strong words. But what's even a stronger word is him saying, I will bet on it, that he will drop the Ripple case. I said this, more than a million times. Bitcoin is the only crypto asset with regulatory clarity. XRP is about to be the second asset in the American market space, one of the biggest market spaces on this planet. XRP is about to become the second crypto asset that has regulatory clarity. If you haven't looked into XRP, look into it. It's still not too late. If you're somebody that is jumping on the bandwagon, of hating XRP for no apparent reason, because your favorite crypto influencer is telling you you should hate XRP, don't be a moron. Do your own research. Okay, stop listening to crypto. Look, I've said this many times. Everybody's entitled to an opinion, but opinion is not correct and facts are facts. And Paul might have an opinion. Chris might have an opinion on this agenda, but he is a former CFTC chairman, which adds credibility to his opinion. And he's not the only one. There's been many SEC commissioners that currently work at the SEC, and former SEC commissioners and former CFTC commissioners that have all came out and said the exact same words. But here's the thing. If you're honestly somebody that's jumping on the bandwagon of being an XRP hater because your favorite crypto influencer is telling you, please don't do that. Use your own brain. Everybody has a brain, so please use it. Research XRP. It's an incredible asset. The XRP ledger in general is an incredible asset. If you haven't looked into it, look into it, and stop jumping on bandwagons to hate XRP, because all you're doing is sabotaging your own future. If you get left behind from XRP, you are sabotaging your own future. Not saying you should buy it, but research it. So it's not financial advice. I'm just telling you to read something. If you get left behind from XRP, you are sabotaging your own future. Stop jumping on bandwagons to hate XRP. It's embarrassing. So, all good things must come to an end, and they have now. We've just reached the endings of tonight's live. If you watched this for the first time ever, this was the CMF live. It stands for Crypto Mouse Family, and I talk about the most recent news that's happening around the world in terms of cryptocurrencies, in terms of CBDCs, in terms of AI and politics and regulations. Vital information for you to know about regarding the world completely transforming into a digital space. And this was episode 211 of the CMF Live, which is incredible, that one, episode 211. And thank you so much to everyone that retweeted this live, that liked this live on X, who's watching on X, who followed me on X, retweeted this live on X, liked this live on X. Absolutely incredible. Thanks so much to everyone that's been following me on X. And thanks so much to everyone on YouTube who's been watching this live and also like the live as well. If you're not following me, follow me. If you're not subscribed, subscribe. And also join the X communities page of this live. Join the Telegram group of this live as well. They're both free to join and they're going to be free for life. And tune in tomorrow for episode 212 of the CMF Live. We're on episode 211 right now. Tomorrow is 212, episode 212. Imagine that. Honestly, I'm very grateful for everyone that's been tuning in every single night. We're on episode 211, like, incredible. Good night, Miles and all CMF. Thank you for the news. JP, let's go. See you tomorrow, brother, same time as usual. Thanks for the amazing live, brother. Let's go, Camel. See you tomorrow, same time as usual. We appreciate you, Miles. Have a lovely night. Oh, Lena, let's go. See you tomorrow, same time as usual. Good night, Miles and CMF. Thank you so much. Mike, see you tomorrow, same time as usual, brother. Good night, Miles and good night, Miles and CMF. Carol, see you tomorrow, same time as usual as well. Thomas, see you tomorrow, brother, same time as usual as well. Glad to see you're feeling better. Take care. See you tomorrow. Kim, see you tomorrow, sometime as usual. Good night, CMF. Miles, thanks, Miles. See you tomorrow. Orphan, see you tomorrow, sometime as usual. Good night, everyone. Bull XRP, see you tomorrow, sometime as usual as well. Thanks, Miles. Good night, family. See you tomorrow, sometime as usual. Commodores. Thanks, Miles. Great info. Let's go. Susie, see you tomorrow, sometime as usual as well. I will be seeing everybody tomorrow, same time as usual. And as I've said, if you... Another amazing show. Thanks. Let's go. Thomas, see you tomorrow, sometime as usual. Free forever. Good night, Miles. Thanks, Miles. Great night. See you all tomorrow. Free and forever. See you tomorrow, sometime as usual. Thanks, Legend. As always, see everyone tomorrow. Shelly, see you tomorrow, sometime as usual as well. Another amazing show. Let's go, Thomas. Running man, keep running. We don't like the way you talk. Eve. Let's go, Lena. Have a nice Thanksgiving. Oh, Kim, have a nice... Oh, yeah, by the way, Thanksgiving. Happy Thanksgiving to everyone that's American right now watching. I really love it. Let's go, Thomas. Good night, brother. Brett, see you tomorrow, brother, same time as usual. And whenever you have time to go through the CEX text, yes, not in a hurry, just whenever you can. Yes, come on. I will definitely go through it. Apologies about that. I will be seeing everybody tomorrow, same timing as usual. If you haven't liked, like. If you haven't retweeted, retweet. If you haven't subscribed, subscribe. If you haven't followed, follow me on X. Join the X communities page. I'll be seeing everybody tomorrow, same timing as usual. Everybody have a great day or a good night, depending on where you're around the world. Thank you so much, Miles, for all you do for us. Good night to you and all the family. Let's go. Troy, see you tomorrow, same time as usual as well. Bill, see you tomorrow, brother, same time as usual as well. Good night. I'll see everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. CMF, see you tomorrow, same time as usual.